Are you seeing any signs that point towards breakout inflation?
Yeah, well, yeah, thanks, Frank. And I think very understandably, this is the top question for our clients at PIMCO and something we're discussing a lot internally. But I think the answer is no. While we do expect some upward pressure on inflation, we could see inflation even drift close to that 2% Fed target, at least temporarily. We don't necessarily expect a breakout in inflation for a few reasons. I think most importantly is the structural factors that have been dampening inflation, whether it's globalization, automation, the fact that organized labor is just not as powerful as it used to be. Those still very much remain intact post-pandemic. And the other thing, Frank, I think is important here is even though everyone's focused on these stimulus payments and sort of, I think, this assumption that a lot of this will be spent. If past is prologue, about 70% of the previous stimulus payments have either been saved or have gone down to pay down debt. So we don't necessarily expect a massive pickup in consumption. We could see it sort of gradually, but again, we just don't see the factors that would lead to a sort of 1970s, hyperinflation cycle.
Yes, and that's right, Libby. I think what's also interesting there is that Democrats were aware of this problem of much of the money from the previous stimulus checks being saved rather than being spent. And so that's one reason that they brought down what the top threshold, the top income levels that could receive a check might be. Anywhere between 6 million to 9 million households will no longer receive a check that received them in previous rounds. So that could be one sign that consumer spending, more of those checks might be spent, more of it might go to boosting consumer spending than had in previous rounds. But certainly we're seeing also a different mindset right now amongst consumers, right? We're hearing people book travel 6 months, a year down the road. And so that might also be an example of the ways that people have a chance to spend this money in ways that they didn't in previous rounds of stimulus checks.
No, that's absolutely right. And again, we're calling for above 7% real GDP growth in 2021. So on the growth side, we do expect a natural pickup in consumption. There is certainly signs of pent-up demand. And again, we do think that we could see inflation drift higher, but drift higher. We don't necessarily see this sort of spike in inflation and then inflation remaining very high, like some economists have intimated over the past few weeks as it relates to the stimulus bill.
So look, let's switch gears back to the Biden policy agenda. Two questions and two words that a lot of people are hearing from D.C. One, the filibuster. What do you see as the near-term future of the filibuster? And also reconciliation, the tool that was used to pass this COVID bill. Could that be used to pass some of the other priorities for the Biden administration?
Yeah, we're getting deep into Washington process, but process actually really does matter. And I think we saw that it was underscored as it relates to this most recent stimulus bill, just in terms of the rapidity that it passed. I think, Frank, to answer your question very briefly, no, we don't necessarily see a change to the filibuster. Most importantly, we don't see 50 Senate Democrats voting to eliminate the filibuster. That would have the biggest consequences from a markets and economic policy perspective, because of course it would only require then 50 votes, not 60 votes, to pass all legislation. We just don't see that happening. I think you'll certainly hear more rhetoric, but again, we just don't think the votes are there. Senator Manchin famously has come out over the past few weeks again and again saying that he doesn't support the elimination of the filibuster, albeit he may support some marginal changes. But I think also, importantly, there are many other centrist Democrats in the Senate who also line up with Senator Manchin. They're just a lot more private about it. Now, reconciliation, it's a great point, because this is, I think, a turning point or an inflection point for the Biden administration here. Do they prevent working with the other side, with Republicans, and try to use reconciliation again? You remember, the reconciliation is the tool that does allow for certain types of legislation to only pass with 50 votes. Of course, that's what We just saw this COVID relief bill pass with. We also saw the Trump tax cuts passed by reconciliation. It's a way to, only pass against certain types of legislation with 50 votes, but basically prevents working with the other side. And Biden was all about unity, about bringing folks together. So this is an inflection point. I think that the view is he probably will try to do this via regular order, via 60 votes at least for the next few weeks, if not the next 2 months or so. And then he may have to resort to reconciliation. But I think the most important thing from an investment and markets perspective is that COVID relief passed very quickly. We should not expect infrastructure to pass this quickly. Infrastructure, I've always called it the unicorn on Capitol Hill. Everyone likes to talk about it, romanticize it, but no one's actually seen it. And it's complicated. It's ill-defined. It means different things to different people. So I think the bottom line here from a markets perspective is that we should not expect infrastructure to pass very quickly. It's going to be, a long slog. And again, there is a chance that President Biden, like other presidents before him, is not successful on this front.
Shepard Smith here. Thanks for watching CNBC on YouTube.